Hey, this is Trader Travis here with hopefully some inspiration for you in an email. For those who are on my email list, I've recently sent out an email talking about my thoughts on the market, the economy, how we're having both a health and financial crisis at the same time. There's a lot I could talk about, but I'm trying to keep this video under 40 minutes. The core content of it is already 30 minutes, and I hope you're going to enjoy that. But before we get to that, the reason I wanted to record this video is because despite the chaos in the world, there's two types of people: those who panic and those who have a plan. And I seen a joke on Twitter that said people who panic buy toilet paper, people with a plan buy stocks. And I was like, it's funny, but I was like, it's kind of true. And everybody I've talked to was like, you seem rather calm, Travis. I'm like, well, yeah, it's because I've recognized that panic shuts off my brain, right? I get caught up in all that, and I want to be observant. And I've seen a lot of different things. And most people have been, happy about my emails. One guy was like, you're spreading fear in your emails. I'm like, no, it's kind of just common sense, right? Because I'm not panicking like everybody else. I'm kind of zen and observant. And so here's things I observe. My local economy is affected, and I'm in a really small town. So if my small town is being affected, I know the bigger cities are being affected. The local yoga lady who has yoga classes below my office here, she shut down her classes, right? You think that affects her income? Mm-hmm. My local bank, I went there the other day. We're buying another piece of real estate, and I went to get a cashier's check, and then people were in the bank doing cash runs, right? The bank is running out of money. The banks only have a certain amount of cash available, and if they run out of cash, they have to order, right? So they have already put parameters in place where you only can withdraw a certain amount. And then the teller leaned over and whispered to me, she was like, we're running out of money. We're only supposed to lend out so much, right? I was like, that's kind of messed up. Like, your own money, but you can't get access to it. Because one bank, the limit was, I went to both of my banks here in town. One was $2,000 limit, and the other one was $2,500. Your own money, but you can't get to it, right? And if you wanted more, they had to order money. You had to come back. It's bananas, right? So I was telling one of my co-trainers, I was like, these are things I'm observing. When you're not panicking, you can kind of see what's going on. I'm seeing people get laid off already. And so in my email, I talked about, well, I'm pretty sure this will put us in a recession, right? It's not really spreading fear. It's just, hey, let's look at this without, being panicking, and let's do the math on it. If everybody manufactures their products in China, Nike, Apple, right, and China's been shut down for months, do you really think that's going to affect the profits of these companies? Yeah. When restaurants are closed because they're saying, oh, no public gatherings, right? Businesses are giving back money. I know because I had to cancel a trip and the hotel gave me my money back, right? All these people are losing money. If you think that won't affect the economy, you're just delirious. And I have very little patience for delirious people right now, right? I'm just trying to shepherd my community through it without panicking. Let's look at the facts and then say, okay, well, don't panic, have a plan. So I pulled out a bunch of cash from our banks, maybe 3-6 months worth, because my wife was like, won't debit cards work? I'm like, yeah, in theory. But I was like, I prepare for the worst, hope for the best. Debit card, credit card, cash. One of those three should work. I know people are like, that's why you should buy gold and silver. I'm like, I can't wipe my butt with a gold bar, right? So I'm not going to go there. So anyway, so these are the things I'm observing. So I was like, yeah, I can see this affecting our economy. And if the stock market is already down 30%, right? And if these numbers and the true effect of this virus, the numbers of how it affected economy, I was like, yeah, I'm sure the stock market will fall further and we will go into a recession unless the government pulls out some magic trick out their hat. After all, they did bail out banks in the financial crisis. Why can't they bail out us average Americans, right? So just pay attention to that. Don't panic. Come up with a plan as to what you are going to do. And when you come up with a plan, it actually calms and centers you because you don't feel like a victim anymore. And speaking of plan, it's the same with your money. There are a lot of reasons people are freaking out. A family member contacted us and said, hey, should we pull out money in case we go into a recession? I'm like, no, it's no need. Your account has insurance, right? Their account is actually higher now that the market fell because they bought put options. And so, in the stock market, you may feel like a victim. There's nothing you can do, right? You just sit there and take the loss. But that's panic. That's why you have to devise a plan. When you have a plan, it literally calms you because you're not a victim anymore. You are in control. And that's why I want to share today's video with you. It's Bear Market Blueprint Part 1. I actually shared this. This video is actually for current members of my program because it's kind of a oldie but goodie. It'll refresh you back to this Bear Market Blueprint I released in 2018 before the market correction then. And then part 2 of the blueprint we're walking through now, right? And so in part 1, I show you some of the ways we prepare for the market crash. Now, there's not a lot of them you can do anything with now because they would have benefited you beforehand. But the reason I'm sharing this now publicly is because there's one technique in general I wanted the public to see. And that is because I know there are people like my niece who has a 401k. And they're feeling like there's nothing they can do. Their 401k is losing money. And I decided, you know what, I don't want people to have to enroll in Success Academy to get this bonus. I wanted to do my public service. You know, people are rallying together now. You know, I'm seeing so many awesome things in humanity happening, people coming together. I was like, I can do my part by sharing something that's generally for my paid members, but you can have access to it for free. And it's called Buy and Manage Secrets. Now, this is a longer video, but just that one section alone is valuable because I show you how we used the market crash of 2007 to 2009 to double or triple our 401k. And I text my niece the other day, you know, I was like, hey, it's time. So she tripled her contributions to her 401k to take advantage of this technique. You will see that technique in this video. So I wanted to share this publicly for anybody who has a 401k, a managed account by a professional. Hopefully you can use it. If not, you know, even if you can't use anything in the video right now, I want you to still see that there is a way to protect yourself during market declines. You don't have to be a victim. As a matter of fact, where is it? I'm looking at my emails here. I just got an email from one member, right? They just made a 200% profit or $6,435.47 during a market decline because they owned a put option and they sold it, right? And I'll pull up another email really quick from another member yesterday. They went and they called TD Ameritrade and something happened with one of their orders. So they called TD Ameritrade and the representative, and they were, you know, going back and forth about the crazy times, right? And he was like, hey, I'm not too worried about it. Our mentor taught us how to insure our trades that my maximum losses actually wound up making me a $1,000 profit. And the rep at TD Ameritrade was like, hey, you're the only one I've spoken to this day today with that type of story to tell. And if you come here in the members area, which I'm going to block out their names because they didn't give me permission to share this, but I want to show you that in the time where it seems like the world's falling apart, the market's dropping 30%, we have members saying, hey, I'm actually up right now, you know, and I'm not worried if the market falls further. Then moving forward further down, right below that one, we have another member saying, hey, so far in 2020, I'm up 23%, right? And then towards the bottom, he said, hey, I've achieved financial freedom at a young age. And I'm sharing on this not to really throw it in your face if you're losing money. Please don't take it that way. And if you do take it that way, you're crabby. I don't have time. Really, at these times, I have very little patience for ignorance, right? I'm at home with 3 young kids. I'm in isolation, like all this stuff going on. My patience level is like out the window, right? So like, I don't have any patience for crabby people. So look at it for what it is. It's inspiration telling you that this is a position you could be in, right? There are people profiting. Don't listen to the financial planners. Everybody's losing money. No, not everybody's losing money. All right. I just recorded a video. Who did I record it for? The Success Academy, showing them our model account. I put it up on the screen. The model account I'm managing for my mom. She's actually making money. So don't listen to them when they say everybody's losing money. That is not true. The educated ones, we're doing okay. So I didn't want this intro to be too long, but anyway, I'm about to load up Bear Market Blueprint Part 1 of 2. Part 2 is where I actually walk members through the market crash, showing them what I'm doing with my accounts. So members, I did promise that to you. The market crash happened so quick, I couldn't release training fast enough. So what I'm going to do for Part 2, Part 2 covers, you know, what I do during the bear market and and then also after the bear market. So if you're a current member of any of my programs, Success Academy or Market Club Options, you will get access to that. You will see that. As a matter of fact, I've already recorded videos. So Market Club Options, that's in the members area. Our most recent April video showed you what I am actually doing during the bear market, how I protect myself. And then after the bear market, we will start new case studies. If you're a Success Academy member, right? We're going to use a 10-minute income trader account. So this is the only active account I'm managing. I decided it's not going to be called Bear Market Blueprint, but I was like, you know what? I can just use our Journey to 100K case study. So this is my only active trading account. I am actively trading. And so what I'll do in these videos is you will see me walk through the bear market. So you can see I screwed up. I took a loss. I'm showing you how I'm slowly recouping that loss. And then in these videos, that's where I said I talked about my mom's account. Any other account I have, like we have a Vanguard 401k, I will touch on that in these videos. So if I have an account and I'm doing something with it, I'll just add it into the case study, kind of as a bonus remarks, things like that. And so that's how I'm going to decided to walk through this bear market, so that way we didn't have like different kinds of trainings all over the place. I'll just use our current case study for the bear market blueprint part 2. So again, I'm just going to load up part 1, oldie but goodie, just to refresh everybody's minds and also share this with the public, hoping it will benefit someone. So you take care, stay safe, stay calm, and Godspeed. Bye-bye. A while back, I promised that I would share what I call my bear market blueprint, because what we want to do and what I advise people to do is, it's like they always say, when should you get a alarm system for your house? Is that after someone breaks into your house or beforehand? The best time to get an alarm system is before you are burglarized. Same thing with a market crash. The best way to prepare for a market crash is beforehand. And so what I want to do is share a bear market blueprint training. This is a training I use to kind of teach people how we go through the crash, how we protect our money as well as profit from it. Now, full disclosure, this training you're about to watch is part of a higher end training program I have. But instead of you having to invest, thousands of dollars to get a hold of it, I'm going to provide a copy of it to you for free. And also, this is going to be part 1 of probably 2. In this first portion, I will share my mindset and how I view bear markets. The next portion of the training, I'll share some of the strategies I will use when the market actually does crash in price. And then during the crash, you'll be able to look over my shoulder, just like you're doing right now. You'll be able to see in real time how I protect my money as well as profit during the downturn. So with that being said, let me load up this bonus training. And as always, if you have any questions, just post them below this video. I'm in the members area Monday through Friday, and I will get back to you within 48 hours. Take care, and I hope you enjoy. I promise everyone here that part of being a member that you would have market crash mentorship. And what I mean by that is, if the market crashes during your membership, what I'll do is walk you through step by step, the crash. During the crash, you'll see what I do with all of our investments. And the way I'm going to do the market crash mentorship is something I call the bear market blueprint. All right. Now, full disclosure, this training, this is a bonus for Success Academy members, but I did promise it also to Market Club option members, the people part of that program. And so, and also it's so valuable, meaning that I don't want anybody else to suffer during the crash. I probably will offer it other places too, so keep that in mind if you see it somewhere else, but this is a free bonus for you. Next thing, I made a November 2018 market crash prediction. This was back in 2015. I made this back in 2015. I said, well, I think the market may crash on around November 2018, if anybody remembers that. I probably will be wrong. Beauty here is, and I've put it on my Excel sometimes where I had predictions. My fund prediction, because I'm bored, the market will be down either tomorrow or Monday. However I trade what I see, not what I predict, I'll see. All right, and that's here. Now, I've been predicting the market may crash November 2018, but I'm trading what I see, not what I predict. I haven't bought a bunch of put options, so I want to make that very, very, very clear. Second thing is, I want to publicly record this, that I possibly will be wrong, because I'm like, it's here now, almost June, and I don't see the main thing I want to see, and that's irrational greed. If I saw a lot of greed in the market, people coming to me for stock tips and things like that, I'd feel more confident that the market would crash in November, but I don't see that. I still see too much fear and worry. So
I'm like, wow, if the market has been going up already now for almost 10 years straight. So it's going to be amazing if it keeps going up. I mean, no one would have predicted that on the front, and not even me, that the market will go up for 10 years straight. The only downfall with that, let's pull up some visuals so you can kind of see that. The only downfall, the scary part, is that if it's gone up for 10 years straight, God knows what the downside is going to be like. If it's going to be horrific for people, or it's going to be a really quick downfall, I don't know. But, the higher something goes up, the farther it has to fall. So it's kind of scary for people who don't have the tools and techniques that we have. But anyway, let's come back here to the bear market blueprint. The way I think about a bear market blueprint or market crash blueprint is I think of it in 3 stages. You have before the crash, you have during the crash, and then you have after the crash. All right. Now, I put a $2,000 value on this training. This is only going to be about part 1 of 2. And the value is not, in education. I'm like, well, I figure at bare minimum, if a person doesn't lose 50% of their retirement account during a crash, it'd be worth at least $2,000. Of course, it's worth a whole lot more than that, but that's like the bare minimum that, okay, during the next market crash, I won't lose 50% of my 401k. And not only that, I will have strategies and tools that I can use for the rest of my life so that I never suffer during the market crash like everyone else. And I don't know if you've seen this, but I've told people that, look, inside this course, what I'm going to do is personally walk you through how I protect my investments as well as profit during the downturn, how I ensure my portfolio so that it's guaranteed that I'll make money during the crash, and I'll try to lightly fulfill those promises right now with the 7 ways to protect your portfolio. You've seen this probably before in the members area, so I'll lightly touch on these tonight. Now, how can I guarantee that I won't lose money? That's what I talked about. It's kind of counterintuitive. The easiest and most preferred way is to simply stay in cash, meaning that I am completely out of the market. Now think about that. If the market crashes by 50%, people in 401ks, just the way they are designed, you're 100% invested. But if we're not in the market, we're not invested in any stocks, and our money is like in a money market fund, can we lose money? No, we are guaranteed not to lose money. Again, it's counterintuitive. People, when I say I'm going to show you ways to guarantee people, we won't lose money, people are probably thinking strategies. I'm like, that's why I want to cover this blueprint, because it's not just about strategies. It's about it's strategies and techniques. It's a mindset thing. Cash is honestly the best way. In the last bear market, I was mostly in cash, just sitting back, watching everybody else freak out, and it was sad, and I was a financial literacy counselor. People would come in my office crying. They had plans on retiring, going to visit their kids, markets crashing. They're like, we can't retire. We lost everything. We don't have any money now to go visit the kids. And it was heartbreaking. And I'm sitting here like, I'm not losing a dime. Because we didn't have most of our money invested. You'll see why here in a little bit when I cover one of the strategies we employed. But anyway, here's the 7 ways. Cash, bear strategies. That's another way you can guarantee you'll make money. That's a little bit more tricky because you can't really guarantee, because what if you buy a put and then you lose money on the put? Well, you didn't guarantee. The only way I have found to truly guarantee I won't lose money is to stay in cash. You can get high probability trades with puts, and that allows you to make money when the market crashes, but it's not a guarantee, if that makes sense. Then we have inverse ETFs, same thing. They can allow you to make money, but there's no guarantee. And the one I've been profiling since 2017 is VXX. This is an inverse ETF. It's been going down last 10 years. Why? Because the market's been going up. It's inverse. We just drill into a 9-month chart. Wait for my chart to catch up here. Now, when the market corrected recently, it went up 100%. All right, so that's an inverse ETF. So if this is around when the market crashes, I could put my money here, and it doubled in price. It went up 100% in value just during a little small 10% correction, which wasn't even that volatile. Can you imagine how much it would go up if the market actually crashed 20, 30, 40, 50%? So I could put my money in this, a portion of it. So that's one way, we could make money during the crash or protect our portfolio. The 10-2-10 formula, the way that protects you is, we don't always, I've maxed out my risk during a correction, but what if you're a person who only likes 5% of your account out at any one time? Well, that protects you because if the market crashes, you've already capped what you can lose. You only can lose 5%. It's no big deal. All right. So that is another way. It's, again, counterintuitive. Most people wouldn't think that, but it's built-in insurance. You don't have all of your money out in the market. You only have a little bit. Buying and managed secrets. I'll show you that here in a little bit. I can skip this one. Family Freedom Fund is built-in insurance. I have a Family Freedom Fund trade I recently made here. Well, one I made in 2017. The 2018 version, I'm going to start trading SPY finally in this account. That brought in $1,100. That has built-in insurance. Why? Because I don't have to buy this stock until the market falls 20% from its price high, right? So that's one way. When the market drops, I'm not worried a bit. And, I don't even look at it for my stocks until it falls 20%. And then I know, okay, now I'm going to start buying. So that's built-in protection. And then another way my mentor taught me that I don't talk about it a lot in this program because it's an options program, it's multiple streams of income. He told me that most millionaires had at least 7 streams of income. When one income source dries up, you have 6 more that carry the weight. He learned this because he was a real estate investor. He went bankrupt with real estate. He was like, God, never again. I was like, yeah, been there, done that. Same here. So when he rebuilt his empire, became a millionaire again, twice in his lifetime, multimillionaire when I met him. He owned real estate, stocks and options. He owned interests in other businesses, things like that. So multiple streams of income coming in so that all of your wealth is not tied up in the stock market. Stock market crashes, no big deal. We have rentals coming in, set paycheck every month, not a big deal. So that's kind of how another way you can protect yourself from market crash. Now, also said I'll show you how we use the market crash to triple the value of our 401k account. So I want to walk you through that now. Now that's used to be a bonus called Buy and Manage Secrets. That's not in the members area anymore. So I'll give you the shortened version of that right here. And that was Buy and Manage Secrets, what I said that I would show you. Now, the underlying philosophy behind that is faith plus history equals massive wealth. Okay, faith plus history equals massive wealth. What do I mean by that? Let's pull all the way back from the Great Depression. We're looking at the S&P 500. History. Does the market go up overall? Yes. Has a bias to go up. Does it always go up? No. But that's just history. We are a progressive species as humans. Okay, you have to have faith that human behavior will not change. The market may go through horrible times like the Great Depression, but humans will always come back. That's the faith. Plus the historical accuracy of the market goes up over the long haul. That's what we have to keep in mind. Faith plus history equals massive wealth. So if we have another Great Depression or another depression, we have to have the faith that eventually things will turn around, and then we have to invest accordingly. Right? So what this approach is, we are essentially going to do buy and hold, dollar cost average, that boring strategy. It does work. I just don't like the way people do it. I added my own slight twist to it. And that slight twist is what will accelerate, was what did accelerate my portfolio's performance. So here it is. Here's a slight twist. All right, so let's start at the bottom of the left graphic here. September 2007, you see a contribution of 100. Again, buy and hold, dollar cost average. September 2007, 100, 100, 100. In October 2007, right around when the market was topping, you don't see any more $100 contributions. I scaled back to $5. Okay, I kept those $5, and the reason this is important because for certain strategies or certain accounts, I don't believe in timing the market and cashing out and all that. You don't have to, but you don't also have to keep throwing your money, in a stock that's crashing. So, I kept the $5 contributions, and here in October 2008, right when the market fell again. Remember I told you I don't get excited until the market falls 20%. You can see these power contributions here. I started throwing everything at the market, and this is what I call power contributions, 350, 350, 350. I'm contributing more than I used to contribute. I'm throwing everything I can at the market. All right. Faith plus history equals massive wealth. This is what Warren Buffett was doing. Warren Buffett was buying. Good enough for him. Good enough for me. So I'm buying. All right, the way that you look at that, you're like, okay, you just buy stuff when it's on sale. That's my philosophy, right? But the way this works is this is why it's so powerful. And I have a graph here. So we can look here and let's focus on the left for now, if you can. So this on the left is traditional buy and hold, $100, $100, $100, share price of a stock, 150. And again, it works because the philosophy behind buy and hold is you invest the same dollar amount, and then when the stock is cheaper, you just buy more shares. So it averages out in the end. And I like that. I'm not saying, I'm not here to disown buy and hold because I know it works. I personally just don't like to suffer through 50% losses. I'm sorry. I'm like, that makes no sense to me. So anyway, on the left, you see we invested 900. Our average share price is $16. Over in total, we bought 54 shares. Okay. Now, if we were to sell off 54 shares at $100, the ending price, we'd bring in $5,000 profit minus our contribution of 900. That's $4,500 profit or 500% return on our actual investment of 900. Okay, now let's go over here to Buy and Manage Secrets, what I actually did with my 401k account. Okay, what Buy and Manage Secrets is, okay, we do buy and hold, dollar cost average, $100. When the market starts falling, we reduce our contributions. We don't cash out. We don't freak out. But we're also like, okay, I'm not going to keep throwing my money at the market when it's falling. I'm just going to wait until it's super cheap. When it's super cheap, I'm going to throw everything at it, a bunch of money at it. We're going to buy a bunch of shares at the lowest price. And then we just start resuming our normal contributions. We invest the same 900. Please pay attention to that. You invest the exact same 900, but because you managed it differently, now the average share price is $11. You wind up buying 76 shares. And if we sold all 76 at $100, our profit will be $7,600. Okay, that's a return on investment of 744% versus buy and hold 500. This is the only time I get upset with buy and hold enthusiasts because I'm like, there's different ways of doing the same thing, right? We're not doing anything. We're doing the same thing they are. We're just doing it differently. And I like to say a smarter approach. Okay, same 900 again. I'm going to stick with that. It's the same exact 900 invested. We just did it in a more prudent way. We waited until things were absolutely on sale, and then we threw everything we had at the market. This is theory. So let me show you actual reality here because I don't own those mutual funds anymore. I don't own any mutual funds anymore. Mutual funds are ripoffs in my opinion. So this is that actual retirement account. You can see here I have it highlighted, beginning balance $4,000, ending balance $16,000. That's what I mean by we use the market crash to triple our retirement account. Well, when I showed this a long time ago, people are like, oh, what about your contributions? I'm like, okay, yes, that's true. Contributions of $5,000. So I contributed more than the beginning balance, right? Small balances, so don't focus on that. Focus on the percentages and what actually happened. So, all right, it tripled the value of the account. But even if you back out my contributions, okay, it still winds up being like 100 and I don't know what it is, like 130% return on that account. When the market in that same time frame, I think we only went up like 60%. So again, this is a powerful approach. I call it Buy and Manage Secrets. All right, so that is how we use the market crash to triple the value of our 401k account. So we'll do something like this again during the next market crash. I just have to figure out what account to do it in because again, I don't really own any mutual funds and things like that. So our goals. All right, so I've already covered, let's quick recap. I've covered the 7 different approaches you can use to protect your money during a market crash. I covered how we tripled our 401k retirement account and how the market crashes, I think of them in phases: before the market crash, during the market crash, and after the market crash. Now I want to talk about the number one goal during the market crash. I have 3 goals with one primary goal. My goal actually is not to double or triple my money. Now that was during the market crash. Now, I was going to share this surprise later. Yeah, after the market crash, yeah, my goal is double or triple my account after the crash. You actually make your money after the crash, not before or during, in my experience. But during the crash, I have one absolute goal. But my main number one goal here is I break up my goals for this at least into three: minimum, target, outrageous. Minimum of what I'm trying to accomplish, the target of what I hope to accomplish, and then outrageous is that, wow, if I accomplish this, I'm going to feel like the happiest man on earth, right? So my minimal is to lose less than everyone else. So if this was a market crash, I hit my goal. I lost less than everyone else. That's my minimal number one goal, right? My target is to break even. Okay. My target is to not lose money. Okay. I want you to, and I'm going to stop here for a second because think about it. The default during a market crash, we can look at the Great Depression. We can look at any market crash. What's the default? What is the norm? The norm is for people to lose 40 to 50% of their money. That's normal, right? That's what everybody expects. You call any mutual fund manager, they will say, this is normal. Everybody's losing money. It'll come back. They're pretty much telling you, just deal with it, right? But if you break even and you don't lose anything, they literally view you as like an investment god. Like, how did you do that? We lost half of our account. Like, you didn't lose anything. Okay, so that's number one. So if you don't lose 50%, it's almost equivalent if you making 50% on your money. But the big reason why I don't want to lose money is what we've already talked about over and over and over and over and over again is the secret investing loss formula. Okay, I know that if I lose too much of my account, then my account really has to work super hard just to recoup what I lost. Not even start making money, just to recoup what I lost. I don't want to have to earn 100% just to recoup what I lost. Never. But if I break even, lose maybe 5%, then when I say break even, I'm thinking break even or maybe at the most lose 5%. Because if I'm down 5%, I'm really one trade away from profitable territory. So this is why I don't want to lose money is this, because if I don't lose anything, then when the market crashes, it's at the bottom, everything's on sale, I will have my full account value ready to pounce and take advantage of the crash versus having only half of my money ready to take advantage of the crash. So I'll be in a better position. Using numbers, two investors, one has 30 grand, well, they both have 30 grand, but one loses 50% in the market crash. He has 15 grand at work in the market at the bottom. I still have my 30 grand. So if he has 15 grand in the stock, that's a paper loss. He won't lose unless he sells, but still he has to wait for his account to increase in value by 100% just to get back to where he started, his 30 grand. I don't have to wait for anything. I have 30 grand. I'm going to put all my 30 grand in the market at the bottom, like I just showed you with Buy Managed Secrets. And guess what? I'm making a return on 30 grand. I don't have to wait for anything to get back to break even. I'm immediately in profitable territory on a huge 30 grand balance. Him, on the other hand, he's waiting 5, 6, 7 years maybe to get back to break even. So I'm going to, pounce him performance-wise over the long haul. That's why I don't want to lose money. That's why I want to break even. Okay. Now, outrageous is earning 10% of my account. Now, I'm not trying to triple my account if it happens. Now, this is during the market crash now. This is not after the market crash. After the market crash, yeah. Oh, man, I want to triple my account. Hands down, if I don't triple my account after the market crash, I will feel like a failure. But during the crash, this is all during the crash, in the middle of it falling in price. If I can earn 10%, I would be happy. And then people will be writing articles about you if you do that, assuming they know that you did that. And that's the downfall of us private retail traders. We're not on CNBC. No one knows all the awesome stuff we do because we're not big name people on CNBC. But that's fine. We can help spread the word. You can tell your family of all the things you're doing if you manage to earn money during a crash. Trust me, word will spread about you. People are like, well, how did you do that? You're like, it's going to be too late. I mean, you spent the time to learn this stuff and to practice and get good at it. It's going to be too late for them, unfortunately, because you can't enroll and learn all this stuff in 6 months and think you're going to triple your account. No, it's not. It takes a while to change your philosophy and your psychology. I think we all can agree on that. So anyway, so that's my goals during the crash is just to break even. That's my target. If I actually make money though, I'd be happy. Now, there are different types of crashes. All right. They have 1 day crashes, 1 year, and multiple year crashes. All right. So let me pull up my stock chart here. Let's do a weekly chart. and go back to one-day crashes. Don't happen that often, but they do happen, and you have to be aware of that. Don't get um, don't get jaded thinking that every crash will be the same. This is 1987. It wasn't technically, I guess you could say, I consider it a bear market because it, drop was about 20% or more. But it happened really over a span of about a week's time frame, right? And again, it happened during the later months. We already know that market crashes happen historically in the later months. Now, if you go back all the way from the Great Depression, this is an exercise I want you to do. Go back to the Great Depression, look at every market crash and when it happened. You will see on average they happen in the later months, August through October, give or take. Not everyone, but on average. Okay, so this happened pretty much, I say one day, because it's really 1 week, right? It's hard to prepare for that. Can you trade put options through that? Like, that's tough. And then not only that, after it crashed, I have this line drawn up here because this was August 1987. It did not get back to that high point until July 1989. August 87 to July 89. 2 years to get back to where that's at. Okay, but it happened so quick, it caught everyone off guard. Right, that's a 1 year crash. Oh, excuse me, I call that a 1 day crash. Then we have 1 year crashes, and let me pull up. I have the SPY. This is finance.yahoo.com. I looked up SPY, and let me see if you can see my charts here. Yep, and I just hit performance here, and what I'm doing is scrolling down, just showing you the historical performance of SPY from 2000. It only shows 1994 to now. So we see 1994, when the internet technology crash, we see a loss. This is a 3-year crash. This is a multi-year crash. Remember, I say 1 day crash, 1 year crash, 3 year crash. This will be a 3-year crash, meaning that the market went down for 3 years in a row. But after that, it's up, 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 up. In the market crash of 2007, 2009, it started in 2007. But looking here, you can see that the market actually ended the year up in 2007, and then 2008 it lost money. Now, from the high point to the low point, in total it lost about 50%, but you can see only in that 1 year it technically lost money. In 2009 it came back and it's been making money since, right? So you have some variations of different types of crashes. Now, looking here, I pulled this up. Now, looking at this, you see all these up years, you see a couple of down years. Now, can you, this is another way, can you now understand why I generally only buy puts during market crashes? It stresses, not only say it stresses people out, it just baffles people, because even during the correction, you didn't really see me buy any puts. People are like, well, why not? Because this is what I know. Over the 15 plus years I've been doing this, you're fighting the overall trend of the stock market. Win, 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 win. You hardly see any losing years. Even just looking at this, gosh, I don't have it anymore. Even looking at a chart all the way going back to the Great Depression. Let's wait for my charts to catch up. I didn't zoom out. Oh, here it is. Okay, looking at this, we're looking at the historical performance of the stock market. It goes up overall. I don't like fighting that trend. It's difficult making money with puts when the market is having a correction or things like that. Over the long term, the market goes up. You don't even have to buy puts. You honestly could just sit in cash and do just fine. Just avoid losing money and you'll be okay. All right, so those are the different types of market crashes. And the reason I'm showing that is because you have to use different strategies and different approaches. So if you have a 1 year plus crash, you can go to cash. If we come back to 1987, cash can't protect you unless you were able to predict this. And I haven't found anybody able to predict crashes like this. Okay. So unless a person is prepared beforehand and can predict this, cash can't help you. You will just suffer. All right, and that's where 210 formula, all this stuff comes in. So you can't use cash in like a 1 day crash. You can only use cash protection method in a 1 year plus crash. Crash has to happen over a span of 1 to 3 years. That's the only way cash will help you. Bear strategies puts 1 day or 1 year. I have 1 day asterisk here because, again, The only way to make money in a one-day crash like the 87 is if you already had insurance ahead of time. Like you just always have put options on your account. That's the only way someone like that would have benefited from an 87 crash. Other than that, you would have lost money like everyone else. So there's really nothing much you can do. That's where, again, risk management has to come into play. But you can use puts and bear strategies for market crashes that last a year or longer. You have a higher probability of making money. Inverse ETFs, again, the only way a one-day crash will help you with those is if you're in it ahead of time. So you can see now with pretty much every market crash, the only one we really can't do much about are the one-day crashes, except knowing that they do happen. And maybe you just want to always have some insurance on hand. So inverse ETFs you can use on crashes that last longer than a year or more because you have a longer time frame and kind of just sit and wait. You don't have to be so hyperactive. 2-10 formula. Again, going back to that, yeah, if the market crashes in one day, like if it tomorrow or next week, if it crashes in 20%, as long as you're following 2-10 formula for your active account, you'll be okay. You'll lose money, but you won't go broke like everyone else, okay? So you can use that both for the one day and the multi-year crashes. All right, buy and manage secrets, 1 day or 1 year. If we had a 1987 crash again, I would find money. I don't care if I took an equity line of credit out of my house. I would find some way to find some extra money, and I'd start scooping up stocks as much as possible. Oh, well, I don't think I said this, but the buy and manage secrets, I absolutely only do that on mutual funds or exchange traded funds. I absolutely never do that on stocks because a stock can go to zero or a stock can go bankrupt. So I never average down or buy more when it's on sale. Never with the stock. I do that with mutual funds or ETFs. So buy and manage secrets is a strategy you can use either in a 1 day or a multi-year crash. Family Freedom Fund, same thing, 1 day or multi-year crash. Multiple streams of income, 1 day or multi-year crash. All right, now here are all the 7 again. Now I may use one or all of these 7. Again, my preferred method is cash. That's the method I mainly used during the last crash. It was just easier for me. I did trade some puts. Also was building out my free course on the web. So I traded some puts for illustration purposes, but most of it I just sat idle, just waiting. I just wait until everything sorts out. And then at the end, that's when I, trade the most at the bottom. So again, just to recap what I talked about, I kind of view the blueprint as a sequence of phases. What I do before the crash, what I do during the crash, and then what I do after the crash. I mainly focus tonight on kind of before. The prep is important, having a game plan. I lightly touched on during, but after the crash, because all the money, honestly, is weird. You think you make most of the money before or during. No, well, you could argue that, but really all the money is made after the crash, not before or during. But you will not be able to make money after the crash unless you prepare ahead of time. And that's why I wanted to spend the night talking about kind of before, getting your mind thinking about, okay, let me devise a plan on these different types of crashes. What am I actually going to do? You do not wait till the market crashes to figure out what to do. You have to figure out that ahead of time. So in the next portion of this training, I'm going to walk you through all of my game plans, how I'm going to use these 7. What do I have in plan? Like if it's a 1 day crash, what am I going to do? If it's a multi-year crash, what am I going to do? How am I going to employ these 7? It's all theory. It has to be theory because you don't know what type of market crash it'll be. So it's going to be all theory, but it's going to be a game plan. And then that's why I said you have to have market crash mentorship with this because you need to see how I actually implement this. I'll look at the market and then I'll determine, okay, which of these 7 approaches will I take based on what the market is doing. All right, so that's what I wanted to talk about tonight, just kind of before and during. And during and after the crash, when I said you make most of the money, buy and manage secrets is a perfect example of that. My money wasn't made before or during the crash. My money was all made after the crash. After the crash is when my account jumped up in value. Looking at here, all this growth right here, this 300% plus growth happened after the crash. Right? It didn't really make money during the crash. I was losing money like everybody else on paper, but I was contributing so much that after the crash, the account had an accelerated return compared to anyone else. All right, so tonight I just kind of touched on before, lightly touched on during, and then the next portion, it might be pre-recorded portion, I will talk about during and after, what I plan on doing during and after the crash. Hey, I thank you for your time tonight. Time is your most valuable asset. As always, I literally I'm honored that you spend it with me, allowing me to share my love of trading with you. And I can't wait to record the second part of this bear market blueprint training with you. All right, you take care, and I'll talk to you soon. Bye-bye.